This might be the biggest day for Palantir. Palantir is back in the spotlight, and Wall Street is paying attention to it. The numbers are shocking. A massive 1.4 trillion Palantir might come in just a few hours, and around 23 billion has been cited. People are hyped, and analysts are giving their final signals. What is happening? And why Palantir will make a lot of millionaires soon? Well, let me explain. Disclaimer. Today might actually be the day we've all been waiting for. Palantir is officially playing in the big leagues now. Its stock just exploded, shooting up to around $125 a share. The hype is unreal. Investors are buzzing, and there's this electric feeling in the air like something massive is unfolding. But what's even crazier? It's not just retail investors jumping in. Wall Street just flipped the whole Palantir community on its head. It's chaos, in the best way possible, and it seems like it's getting out of control. Billions of dollars tied to Palantir are suddenly on the move, and now there's this wild prediction floating around. Some are saying Palantir could actually hit a market cap of 1.4 trillion way sooner than anyone expected. That kind of number used to sound like fantasy. Now, people are starting to believe it. But wait, before we dive deeper into those sky-high predictions, you might be wondering, how does this reflect on Palantir's current price chart? Well, one analyst nailed it. He pointed out something that most people missed. Palantir was one of the very first to flash a real breakout. It formed this textbook double bottom pattern with a handle, and when it pushed past that setup, things started looking very real. And here's the kicker. Back in early April, it totally ignored a bearish pattern that usually scares people off. That was a major signal. It was like Palantir shrugged it off and said, "Nah, we're not done yet." That kind of strength, that kind of confidence, it's exactly what you look for in a stock that's ready to lead the charge. First ones out of the gate tend to be the strongest, and Palantir is running like it knows where it's going. The momentum is building, the chart is screaming strength, and the sentiment, it's shifting in a big way. If this keeps up, we might be looking at the next giant, right in front of our eyes. And here's what's even crazier. While a ton of people are turning super bullish on Palantir, one well-known analyst just threw a totally different kind of energy into the mix. Jim Cramer, that Jim Cramer just called Palantir the greatest meme stock of all time. He went on to say that the so-called dumb money will stop buying once Palantir hits around $345. According to him, retail investors are just obsessed with the company. But here's where it gets wild. If you follow Jim Cramer long enough, you probably know when he trashes something, it usually ends up doing the exact opposite. It's almost like an unofficial indicator now. If Cramer's bearish, the stock might just be getting started. So when he throws shade at Palantir, it might actually be a big, flashing green light. And get this, while he was trying to be negative, he casually dropped that Palantir could hit $345 per share. Think about that for a second. That's not just a small jump, that's a massive leap. So even while he's calling out retail investors and mocking the hype, he's also kind of confirming that this thing has serious upside. It just shows you, no matter how loud the opinions get, bullish or bearish, you can't ignore the facts. Palantir is moving with momentum, and the potential here is still huge. The growth runway is wide open, and love it or hate it, this company's not done yet. And another huge reason why Palantir is far from done. Investors are going absolutely wild over it right now, and not just your average folks stacking shares. The big dogs are in. Wall Street is all over Palantir. And the craziest part? They're not just tossing around hype. They're working with serious numbers. Morningstar, one of the most respected research firms out there, dropped a bombshell a few months back. They said Palantir's total addressable market could hit around 1.4 trillion by the next decade. And that was before the whole warp speed momentum kicked in, and before supply chain chaos started driving even more demand for what Palantir does best. So it's probably even higher now. And wait till you hear this. They basically took their old estimate of Palantir's fair value and quadrupled it. That's not a small upgrade, that's a full-on re-rating of the company. They're saying the market might be undervaluing Palantir even with the hype around it. The AI revolution is just getting started, and Palantir is perfectly placed to ride that wave. Not just as another software company, but as one that actually helps people make smarter decisions in real time, with smarter data. They compared Palantir's future to what Salesforce did back in the day, taking messy, bloated processes and turning them into clean, powerful systems that made businesses faster and sharper. But here's the difference. Palantir isn't just organizing sales calls. It's helping hospitals, militaries, manufacturers, you name it, completely transform how they think and act on information. This is next-level stuff. And the way Palantir's tech works? It actually gets better over time. The more you use it, the smarter it becomes. It's like a living brain inside your business, constantly learning and tweaking itself to help you make better decisions. And here's the kicker. Once a company starts using Palantir, it's super hard to walk away. The value is just too real. It's not a flashy dashboard or a quick fix. It's a system that touches every part of an operation. That's what Morningstar means when they say customers stick. They're locked in, because switching would literally cost them productivity, money, and in some cases lives. This isn't just enterprise software. It's mission critical. And with more commercial businesses jumping in, spending big, and seeing real results, the growth story is just starting to heat up. So yeah, the noise around Palantir, it's not just hype. It's backed by serious research, real-world impact, and Wall Street's growing obsession. And get this, in just a few hours, Palantir is set to drop its latest earnings report. That could be the rocket fuel that launches this thing straight toward that trillion-plus valuation. If the numbers look anything like what people are expecting, we might be about to witness history. But did you know? It's not just Wall Street that's piling in on Palantir right now. It's the institutional giants too. We're talking heavy hitters like BlackRock, who are going full beast mode on Palantir. These aren't short-term traders. They're the long-game players, and they're doubling down. The latest filings just dropped, and the numbers speak loud. Institutions were buying, not selling. Over 900 funds are now holding a massive chunk of Palantir, and most of them either added more or jumped in for the first time. That's a huge signal. These guys don't chase hype. They move when they see something real. And guess who made the biggest move? BlackRock. They grabbed another 15 million shares, bringing their total to nearly 200 million, which is around $23 billion. That's a monster bet. It means they're not just watching from the sidelines. They're betting hard that Palantir's just getting warmed up. Now think about what that says. You've got everyday investors hyped, Wall Street doing full write-ups, and now institutions making power moves in the background. That combo doesn't happen for just any stock. It's because Palantir isn't just a company. It's becoming a must-have. And the shocking part? The numbers are actually wild. According to one analyst, it's like Wall Street bets level wild. At this point, you can't even tell if it's Wall Street doing this or just a bunch of meme legends hitting the buy button at the same time. Here's what went down. Over $5 million just flowed into Palantir call options, but not just any calls. These were calls betting on the stock to hit 150. That's not some small, safe move. That's a full-on moonshot. And when that kind of volume pours into that kind of bet, it says one thing. Some people out there are insanely confident that Palantir is just getting started. This kind of aggressive options activity, it doesn't just happen out of nowhere. It's usually backed by serious momentum or insider conviction. Maybe it's big money hedging. Maybe it's just really bold retail traders. Either way, it's not random noise, it's fuel. It adds even more pressure on the upside, because when calls stack like that, the price can push harder and faster than expected. And even when you zoom out and look at where Palantir's at right now, breaking charts, getting attention from major funds, being talked about on every financial platform, it's all adding up. The stock's not just rising, it's building a wave. And now even the options market is screaming, this thing might blow past what anyone thought. Bottom line, when people start throwing millions at sky-high targets like that, it's a message. And right now, the message is clear. Palantir's not done. It's just getting warmed up. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click Warren Buffett and Palantir. Two names no one ever expected to say in the same sentence. But something big is happening. A $350 billion cash pile. This is getting out of control. And Palantir might be right at the center of it. But what is actually happening? And why am I being so excited? Well, let me explain. Disclaimer. The whole market's still kind of a mess thanks to Trump's tariffs stirring things up again. And yeah, Palantir's caught in the storm like everyone else. No surprise there. But on the other side, analysts are giving their other info. They are basically saying that Palantir is slowly looking strong right now. And just like that, the hype is slowly starting to creep back in. Investors are giving Palantir another look, waiting for another entry. And here's where it gets wild. What if I told you that Palantir just made a move that could finally pull Warren Buffett into the AI game? Today, something massive happened. A wave of news just dropped, and if you connect the dots, it points to something that could completely change Palantir's future. Warren Buffett is sitting on $334 billion in cash, and Palantir might just be his next big play. That sounds like a stretch, right? Why would he be into a company like Palantir? How could that even make sense? Well, hold on. Because actually, this might not be the first time Buffett's quietly hovered around a play like this. He's been known to surprise people with unexpected moves, and this one? But how could this actually happen? Well, first things first, Palantir's not just sitting around. They've been out here showing off what their AI can actually do. Just recently, their official X account dropped a fresh video, and it's pretty eye-opening. It walks you through how their AIP, basically their AI platform, is being used in the real world right now. Not in theory, not in some lab, but like actually being used. The demo shows companies tapping into AIP to make decisions crazy fast. Stuff like handling procurement, managing logistics, even tackling risk, all automated and done in seconds. It's not just tech for tech's sake. It's useful, it's powerful, and it's being put to work across real industries. It totally changes how people see Palantir. They're not just that defense and government data company anymore. They're starting to look like a full-blown enterprise AI platform, something way bigger. And here's where it all started. The first reason that brought people's attention to Warren Buffett and Palantir was the following. The guy doesn't chase hype, and we know how big of a hype Palantir was back in 2024, but now it's transforming a bit. Buffett goes for companies with real-world utility, stuff that solves actual problems, and sticks around for the long haul. And that's exactly what Palantir is starting to show. They're carving out a role in industries like insurance and manufacturing, places where solid operations matter. That's the kind of thing Buffett respects. Long-term value, a strong moat, and something that works. But this is just some thoughts. But we actually need more info about it. Some solid facts. And lately, there's been growing speculation swirling around something unusual. It started not too long ago. Whispers, posts, theories about Warren Buffett possibly eyeing Palantir. And no, this wasn't just wild internet noise. Palantir had recently revealed they partnered with a major US insurance company, using their AI to cut underwriting times from 2 weeks to just 3 hours. But here's the thing. They didn't name the company. That's when people started connecting the dots. What's one of the biggest insurance companies in the US? And the name of it is Geico. And more importantly, Geico is owned by Warren Buffett. This made a huge hype and a big wave of speculations back in 2024, and it didn't look like just another internet noise. And here's where things start getting really interesting. If Palantir was working with Geico behind the scenes, and Buffett caught wind of what Palantir's AI can actually do, well, let's just say the stock wouldn't stay quiet for long, especially when you consider this. At the time those rumors came out, Buffett's Berkshire Hathaway was already sitting on a massive $277 billion cash pile, fresh off a historic selling spree. But here's the part that's barely being talked about. That number? It's not going down. As of today, that war chest has grown to $350 billion, the largest in Buffett's lifetime. And when Warren Buffett builds that kind of firepower, you better believe he's planning to use it. So all those rumors and speculations, they're starting to feel like they could actually come true now. Now throw in the recent market crash, and it all starts to make sense. Buffett has been quietly stacking up cash, just waiting for a moment like this. It's like he was biding his time for the perfect opportunity, and it looks like this could be it. And here's where it gets even more interesting. Buffett's been selling stocks for over a year now, not buying much, and that's left his cash reserves higher than ever, around $334 billion by early 2025. This wasn't just some accident. There's a pattern here. In 2024, while everyone was jumping on the AI hype train, Buffett was trimming Berkshire's Apple stake, cutting ties with stocks like Snowflake, TSMC, and even Amazon, locking in those profits while others were diving in. Sound familiar? It's actually pretty similar to what he did before the 2008 financial crisis, when he held onto cash while the market was at its peak, then swooped in for massive deals when everything crashed. Like, remember how he put $5 billion into Goldman Sachs during the crisis? Or how he snatched up General Electric for $3 billion when it was in freefall? He also bought Burlington Northern Railroad in 2009 when everything was dirt cheap. So yeah, when Buffett has that much cash on hand, You can bet he's waiting for a moment like this to make his move. So, the theory now starts to make much more sense. And the fact that he might go on a shopping spree soon is almost obvious at this point. But wait, why might Palantir be on his radar? This still doesn't quite make sense. Palantir is a crazy, volatile stock, and many big investors are being cautious about it. But here's the thing. Palantir is profitable now. Huge checkmark for Buffett. Plus, they're moving beyond just defense and picking up real-world wins, especially in insurance. Speaking of which, Geico, which is in the middle of a huge AI and data upgrade, could be exactly where Palantir comes in. Palantir just showed off how they've been helping an undisclosed insurance company cut underwriting times from 2 weeks to just a few hours. And with Geico potentially being that client? Well, that only makes the theory even juicier. And don't forget, Buffett's got some ties here. His company Berkshire used to own Snowflake, another tech company that's used for business intelligence. The guy who ran that deal, Todd Combs, is now the CEO of Geico. And Combs has shown he's down to bring new tech into the mix. With Geico lagging in the data game, it'd make a lot of sense for them to work with a company like Palantir, if not outright invest in it. So why now? The market's been shaky lately. Rates are high, tech stocks are dipping, and valuations are cooling off. Palantir's stock is down from its highs, even though the company is still expanding and doing well. And Buffett? He's all about buying when others are fearful. That's what happened in 2008. That's what happened in 2020. And now? It feels like we're back in that kind of moment. Buffett said it himself. He loves buying great companies at fair prices, especially when everyone else is running scared. Palantir checks a lot of those boxes. It's got a proven moat, it's profitable, and it's growing in a huge way. Maybe that theory of Buffett buying Palantir isn't so far-fetched after all. But wait, you might be thinking, why would Buffett want to buy into a company like Palantir when it's been affected by Trump's tariffs? And hey, that's a fair question. But here's the thing. One analyst stepped in with a pretty solid explanation, especially for the long term. He pointed out that, yeah, short-term bumps like tariffs might shake things up, but when you look at the big picture, it's not going to hold Palantir back. For starters, President Trump announced plans to expand the U.S. defense budget to $1 trillion, which is huge for Palantir. The company's been a key player in the defense world for a while now, and with that kind of budget boost, it's only going to get more important. And let's not forget, the AI revolution is just getting started. Palantir's right in the middle of that, serving as this critical infrastructure to make AI work, both for governments and businesses. In fact, startups are building on Palantir's platform, which just goes to show how embedded it is in the future of tech. Alex Karp, Palantir's CEO, and the team have been saying for a while now that Palantir is on track to become a $1 trillion company. And every day, it seems more and more likely that even some of the biggest players, like Doge, could be using Palantir's tech. So, even with all the noise around tariffs and the market, Palantir is actually positioned to benefit from this stuff. Why? Because as companies deal with the effects of tariffs, the need for smart data and AI tools becomes even more crucial. Palantir helps businesses and governments make sense of complex data. And in a time like this, that's exactly the kind of thing they'll need. A year ago, even the most optimistic bulls probably didn't expect Palantir to reach where it's at now, hovering around that $40 mark, and then seeing some crazy swings, hitting highs and dipping back down. Nobody really knows where the stock's going in the short term. That's the thing with markets, right? But looking at the long term, it's starting to become clearer by the day where this company is headed, and it's a pretty solid trajectory. Now, when you connect all this back to Buffett, it makes even more sense. The guy's a long-term thinker, and while short-term stuff might cause some chaos, Buffett has shown time and time again that he's all about investing in the companies that are built for the future. And with Palantir positioned in the heart of the AI revolution, government contracts, and a growing list of industries relying on its tech, it's easy to see how this could fit perfectly into Buffett's playbook. Still just a speculation at this point, with no confirmation. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.